Good morning. Hope you guys had a great holiday, a little extra time off. And let's see where we're headed here. So news was out, jobs report. Market didn't like it. So coming down here, put it in perspective as we always do. Right? Uptrend, right? Weeklies just took out the prior high. Factory work says, after a greater than 100% retracement, expect a slowing in momentum. That's exactly what's happening. Doesn't suggest a change in the trend. Now we sit back and wait to see what actually happens as far as any kind of corrective action. As you know, the S&P's made a new all-time high, so there's no resistance. But now it has created some intraday. And we don't have any resistance per the the weekly chart, the high of the current bar right now. But so far, this week has just been a narrow range bar. So there's the slowing momentum, narrow candle body. And so on the news, the futures came down. What I have here marked in blue is that gap fill area, and it gapped up. And so we got the 24-hour chart, and it's pulling back here. So we'll see. This is where buyers are going to want to step up, or they will step up. I always say, well, obviously, they're going to step up. We just don't know how many are going to step up. Meaning, can they stop the supply that's coming into this area and then get things? Well, that's the unknown. That's where we now use bar by bar analysis to see how prices begin to stabilize here. Now, just looking at this hourly chart, as they chop sideways, you got a topping tail, there was a retest. And then as they started to come down, and then the news came out, and there was some jiggles, and then down again. So coming into support, this is not the place to be shorting. And you wait to see what the reaction is here. And that might take 5 minutes. It could take 30 minutes, whatever. This morning, we'll see what happens. And we can then monitor that in a smaller time frame to see if it begins to rally or does it drop. So if we view price action that suggests it's going to drop, the next question is, well, drop to where? You look to the left, right? And you see that there's a little hook pattern here, right? A wide range bar up and a little hook. And that's how I referred to that, as a, kind of fishing hook, and back up. And so it wouldn't be too far. So you'd have to be nimble. Right now, no clues of stabilization. It's just kind of hanging there. If we were to look at a smaller time frame, you would see that stabilization, but this bar is not getting smaller. All right. Well, you can see as it kind of inches up there, you get a little bit of a tail there, but not much is going on here at the moment. Buyers, sellers just trying to battle it out to figure which way it's going to go. So we've got the beginnings of after a gap up. And so we'll see where this ends at the end of the day. So if it's red, that assumes it's going to go lower. It's not going to change the trend. As far as this being up here, that move up, that pull back to minor support, the reversal to push higher, and so on. We'll just continue next week with the assessment as to whether it can hold this area, these overlapping bars right here. What SPX levels correspond to the ES? You trade SPX. Well, we just take a look at that and we'll compare the chart. So we usually look at the spiders, but looking at SPX, we can put that up there. We don't have any same data, so it's going to look different. And we have to look at the spiders to see where they are, since this doesn't really give us pre-market activity here. But so we can see the same chart, wider range bar up, and well, it has to look similar. it has to look similar. You know, with the pullbacks, they're not going to be exactly the same, but it has to look similar. But if we look at the spiders, we can get a better idea. You can correlate where the spiders are in relation to where SPX will be, and it'll be gapping down. So looking at the spiders here, we can see 297.37. There's some support there. 297, right? 37. So just now looking at the spiders and gapping down near the low of a green bar. There's a bit of a shock pattern. Your futures chart is incorrect, Greg. I'll have to tell E-Signal that. You know, it's what they put out there, maybe because it's a continuous contract. It shows up there at 3,000. Right. So I don't know. Is it wrong? This close, yeah. This shows the prior close, 3,006. So this is the prior bar, that blue. The green bar is the current bar. So it's a 3,000. So you can see it's coming down to that swing low there, the bottom of the hook. So 29,298. Go back to the spiders. 297.20, low of that prior bar, 297. Is this making the current bar? No. Before. All right, there, 297.02. Yes, that's there, right there. So we're not below the green bar, but we're gapping down close to the low of the green bar, which is going to be bearish. Right? The further the retracement or gap into a breakout bar, the more bearish it is. Morning, Debbie. Yes, Howard. So with trading the futures, you trade the active month. What I'm showing is a continuous contract. That's just the symbol. It just makes it easy so I don't have to change the symbol. But then if you're going to trade the futures, you have to trade, you change the symbol to the active month. I'm trying to decide what you can trade. I would suggest at the beginning, it's probably better to stick with one thing to trade, because if you're starting out, you don't want to be overwhelmed with too much information. But there's nothing wrong with trading both, right? So you have more choices, obviously, trading stocks. And that is a double-edged sword, because if you don't limit what you look at, you'll be all over the place and probably miss a lot of things. With the futures, if you just focus on that, you may be more inclined to do too many trades because you feel like that's where you have to go make your money. So, and I did that for a lot of years, and the futures were always active. And you could do it. Before that, I was only trading stocks. Now I do both. And I think the best thing to do is to find the best looking opportunities and trade wherever the best looking opportunities is. So the futures aren't always going to have great setups, right? So you can trade stocks that you can find the best looking setups, and rather than, you know, picking mediocre ones. So, but you know, they have their own little nuances as far as trading them. You get, you know, go slow, as with anything, little paper trading, then trading small, and you know, the new micro futures opens up the door to a lot of people getting started with these smaller contracts, the larger contracts, right? So, but the analysis will be the same. It's like I'm doing here. Where is these opening up pre-market? You know, what's the trend? Where's support? Where's the unfilled gaps? And so on. And, just like we talk in the room every day, same stuff. Is there a tradable void? No tradable void. Go find something with a void that's breaking the trend or is trending up and it's got room to, to go higher or go lower, and you're getting in near support or near resistance if you're short. So, we do the same thing pretty much day in and day out, following the method. So here, NASDAQ slicing through its area of support and beginning to turn that weekly bar into a topping tail in the area of resistance. Nonetheless, this trend is still up. One red bar doesn't change the trend. And so next bar could be a green bar on Monday, turning back up again. That's why you have to put a particular candlestick in the context of the trend that it's in, the location that it's in, how it looks relative to the prior bars, and so on. So what I'm explaining to you here almost on a day-to-day basis, right? So this one was near support and it's a giant green bar, right? That's powerful, right? This bottoming tail is in an area of resistance. It was a red bar, turns into a bottoming tail bar. That's bullish price action at resistance, suggesting it's going to go higher. Right, so now we've got a relatively large red bar within an uptrend that's not going to break the trend, right? But we can now bring our reference point, a major support here. Right? We've got this congestion there, and we'll see how far this goes here today, as is now reaching that little hook pattern on the Qs, and we'll see where it all goes, right? Or whether it's going to come down here. Smaller time frames, we'll see if it begins to stabilize here, what it's going to do, and we'll see how it evolves throughout the day. Same story over here. Right? Bearish price action, Dow coming down to that little consolidation area, buyer stepping up, right, at that reference point of support. And this is just a great example of how simple it is to see where buyers and sellers are going to be without drawing fib lines, without your exponential moving averages, weighted ones, optimized ones, so on and so forth. Right? This is what works. Now, look at it. Maybe you want to look at some things like a trader pivot line. I don't know. Less tends to be more in trading. And this certainly does work. Bonds down. Everything's down today. Bonds taking a nasty dip to the downside here on that report. So things kind of in lockstep with each other, kind of unusual. Right? I guess better than this wasn't breaking out, pushing up with yields going even lower. So we'll see how this all ends. Oil jiggling around here. Looks bearish short term with this big nasty red bar down, hanging down here at the in the lower half, just going sideways. So we'll see whether it can get above there or whether it's going to break down. And gold, right? We talked about the big breakout on the monthly time frame, which is bullish. And so now here's the consolidation at the top of the wide range bar. So gold is getting pounded here today. You put that in the context of what preceded it and the trend, and it just makes sense that we're going to see some consolidation here, and we'll see how that evolves throughout today and of course into next week, because run up like this typically is going to take more than just a few days of consolidation, and then we'll just see where this goes. And I was curious here. Euro coming down a whole bunch here means the dollar's going up. So some activity here. And you say, well, futures. Well, you can trade currencies too. Right? There's currency futures. And if you want it, this is just another contract. You can see when the setups there are in your favor. You don't have to trade Forex. Right? I would say this is I don't know if I'm using the right terms, but in my mind, a more honest market. than trading Forex, where, you know, brokers aren't taking the other side of your trade. So this trade's just like the other futures contracts. You know, you can bid, you can offer, right? Much better. Yeah. Now it's saying there's a mini euro too and yen. So easier way to start out. So futures, you know, what else more do you need? Right? You can see all the stocks that are moving here. Dan will cover them as well as open positions. And that's it. All yours, Dan.
All right, good morning. I actually don't have that many pre-market gappers today, so when I'm done, just mention some of yours and we'll look at them. Or if you see any on your own, you do the filter and tell me which ones you like. Yeah, I don't have a gap list today. Let's look at opens. In the weekly, Amazon put spread for next week. Had a nice close. We're gapping down $9-10 here. Netflix, same. We have a put spread for next week. And finally, Twilio. You know, I get this email from somebody saying, hey, what's the difference between a directional and an income trade? And do you use multiple time frames? And I said, I always use multiple time frames. And he says, well, then I don't understand the difference. I said, multiple time frames when everyone is just beautiful for directional with a price void. So this one, I said, I don't like the way it came down last week, but look at this 1, 2, 3, 4, 5, 6 bars of support. And then it broke out. I said, let's sell away out of the money put spread because I don't, you know, it's not going to go up aggressively. And I think this is going to hold for a week. So that's the difference. Let's now look at swing and options trader. Run, are you in? Solar stock, Whiskey Hotel. We sold a third into strength on Friday and moved the stop. FTC, same. OMC, same. I tighten the stop. ROP, same. These are all long. And I actually, when I was updating them yesterday, I said if we got a gap up, since a lot of these I just showed you had very nice runs. Now see, these are directionals. Compare this to Twilio. So we bought this one on this day into the close. Daily, weekly, monthly, and alignment. That's a directional. Twilio was not to me. Tilray, we legged into a covered call. Mylan, long stock. Hey, that's gapping up in a weak market. So that's relative strength. I tighten the stop already. RPD, we have a covered call. WNS, we're long stock. And that is it. Qualcomm 7425. Let's put that on our list. You're still in Avgo. All right, so 74. You know what I do? I just mark it off. So we're gapping right here. We'll see what happens. EWZ gapping up 44.90 to the top of this range. It's a bullish weekly. Nice 2-bar reversal here at the low. Actually, a little bull island reversal gap. But the target's not real big. Zulu Sierra. Not really a gap. Oh, this one came from McGraw. So McGraw, it is strong, but you got this prior high. but it's a put spread idea right under these bars. It's a bullish weekly, churning up, sloppy manner. And McGraw, you like hack cybersecurity? Yeah, we can take a look at the sector later around 10 a.m. Rio, a bearish gap. Look at this, way the heck down here. I don't, it's an ADR. I don't like trading them, but that's an ugly gap. Fang was up a lot more. You see here, 108, 109. Now it's 106-ish. Let's see again, the way it came down so hard, there's no way this would be a directional. It came in hard. You got an ugly weekly and monthly. CAG. Oh, I thought it was gapping way up earlier. All right, there's nothing there at all. CGC. Remember, this was the co-CEO being fired on Friday. Not Friday. Wednesday. See, these holidays messed me up. So, gap reversal. Let's see what happens here. And then I always look at MJ, the sector, ETF. And I kind of like this over this red bar. It's a kind of a triangle pattern here. 20 is starting to flatten. These lows held. But over this red bar, it should put spread. Intel's a mess. LBS, I was watching. I like this gap up and building a base. ZM, again, I wouldn't touch this as a directional. But look, it came in kind of the gap area, 50 MA, made a new low, held over Wednesday's high, put spread idea. This just looks horrible. I mean, it's at this BBBY, it's at this prior low, but wow, the trend is down. ADPT and IPO, that's, back to its opening price. Hello, Howard, potential 1, 2, 3. Yeah, it is. That's a 1, 2, 3 setup. Target gap fill. Yeah. And look, it's holding this 1170 from these two 15-minute pivots, which is the low of the 2 days. So that would be a perfect spot to enter. Yeah, perfect setup there for 1, 2, 3. Start off with a day trade. AVA. I personally would like it to go sideways more, let it chop around here to build a bigger base of support. Particularly with the market gap down, I'm not excited about much here today. Yeah, I can't believe the TLT getting whacked, gold. Well, dollar's rallying, so that's hurting gold. Here's an IPO, look at this. There's your IPO price, 28 and change. That's in pain. Boeing down. I'm just watching a couple of these IPOs. Look, bearish retracement on Fiverr, bearish 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's actually a 1, 2, 3 short also. Chewy's a mess. Crowd, well, went up, held, put spread idea over Wednesday's high. Cron, Beyond. Uber and Lyft are at least green in a weak market. Tesla. Let's see. I don't have a single tier 1 trade today. Oh, look at Abco here. We had this from Wednesday, and we took our stop. It wasn't acting right. All right, I'm done. This is option expiration day though, so we'll see if we can find some credit spreads. Now look at key. Remember key, we had, stupid bell. Key, we wanted as a long and it gapped up here and I canceled it, but I kept on my list. Check Google. For what? You know, I think my bias today is challenge me to find something compelling.